Today, we're really going to zero in on Apple Inc. We're looking at their financial health, mainly through their latest Form 10Q that covers the quarter ending March 29th, 2025.
Right.
Think of this as, your quick guide to the key data, the trends that investors are really watching when they think about Apple stock that's AAPL on NASDAQ.
Yeah, we've basically gone through the official filings, the 10Q, to pull out what really matters.
Exactly. We want to give you the critical stuff that shapes an investor's view without getting bogged down in absolutely everything.
So it's about understanding Apple's current position, where things might be heading, but focused on that investor perspective.
Okay, so let's unpack the big picture first. The overall financial performance. What did the numbers show?
Well, the headline is definitely positive. Total net sales were up for both the quarter and the 6 months ending in March.
Right. How much are we talking?
For the quarter, it was a 5% increase. So $95.359 billion this year compared to $90.753 billion same time last year.
Okay, 5%. And the 6-month view?
That was up 4%. So $219.659 billion versus $210.328 billion in 2024. Decent top-line growth,
Yeah, solid numbers. And crucially for investors, did that translate to profit? How did net income look?
It did. Net income was also up for both periods. For the quarter, it hit $24.78 billion.
Up from what, last year?
$23.636 billion. And for the 6 months, it was $61.110 billion compared to $57.552 billion.
So not exactly, explosive growth, but definitely moving in the right direction. Consistent profit increase.
Exactly. And that consistency is something investors generally like to see. It speaks to stability.
And the metric everyone watches for the stock earnings per share, EPS.
Also up. Q2 2025, basic and diluted EPS both came in at $1.65.
Compared to?
$1.53 for Q2 last year.
Okay. And year to date?
For the 6 months, $4.06 basic and $4.05 diluted. That's up from $3.72 basic and $3.71 diluted in 24.
So across the board, sales, net income, EPS, we're seeing positive momentum. That's a good starting point for any investor analysis.
Absolutely. Growing revenue, growing EPS, these are fundamental signals. But, the next question for investors is always, where is this growth coming from?
Right. Which brings us to the revenue breakdown. Products versus services. And wow, services really continues to shine, doesn't it?
It really does. A 12% jump just in the quarter, hitting $26.645 billion.
And for the 6 months.
Even stronger relatively, up 13% to $52.985 billion. This covers the App Store, advertising, cloud, Apple Care. It's a broad category.
That double-digit growth in services, that feels significant for how people might value Apple stock, right? It's more recurring revenue.
Oh, absolutely. It's potentially a game changer in valuation terms. Unlike, say, a phone launch, services income tends to be stickier, more predictable.
Yeah.
Investors often assign a higher multiple to that kind of revenue stream. It suggests, a loyal user base that's locked into the ecosystem.
Okay, so services is strong. What about the product side? iPhones, Macs, iPads?
Products growth was more modest, still positive though, up 3% for the quarter to $68.714 billion.
And the 6 months?
Up 2% for the 6 months, reaching $166.674 billion.
So positive, but not the same engine as services right now. If we break that down further, iPhone
was interesting. A slight increase in Q2 revenue, but actually pretty flat for the 6-month period overall.
Flat, but revenue was slightly up.
Seems like the Pro models, the higher priced ones, are doing the heavy lifting. People are buying the more expensive versions.
Ah, okay. So average selling price might be helping there, even if unit growth isn't huge. That's important for profitability, something investors track closely.
Exactly. Focus on premium is paying off in dollar terms.
What about Mac and iPad? The report mentioned growth there.
Yeah, significant growth actually for both in both the quarter and the 6 months. Mac sales boosted by laptops and desktops.
And iPad.
iPad growth was apparently driven mainly by the iPad Air. Quite a strong showing there.
That's interesting. Maybe a sign of shifting needs, like you said, productivity, education, or just successful product updates.
Could be. Investors will definitely be watching if that strength continues. It could signal new growth pockets.
But not everything was up.
No. Wearables, home and accessories actually saw sales decrease in both periods.
Ouch. Any particular reason?
The report points mainly to weaker performance in wearables.
So like Apple Watch maybe? That might make investors a bit cautious about growth in that category going forward.
It could, yeah. It raises questions about its long-term contribution compared to, say, services or even Mac and iPad right now.
Okay, let's shift gears geographically. How did sales look across different regions? It wasn't uniform, was it?
No, definitely a mixed bag. The Americas and Europe both saw net sales increase. So strength in those core markets.
Good. But what about China? That's always a big focus for Apple investors.
Right. Greater China actually saw net sales decrease for the 6-month period,
Decrease. Why?
mainly attributed to lower iPhone sales there over that 6-month stretch. Although things were apparently relatively flat just in Q2 itself.
So potential stabilization in Q2, but the longer trend was down. Investors will be watching that like a hawk, surely.
Oh, absolutely. China is critical.
Mm.
Any weakness there, whether it's competition, the economy, it's a major concern. We need to see if Q2 is a blip or a turnaround starting.
What about other regions? Japan? Rest of Asia Pacific?
They both saw net sales increase.
Okay. And the report mentioned currency fluctuations.
Yeah, unfavorable currency movements negatively impacted sales in most regions. It's an external factor that just kind of shaves off some of the reported growth. Investors need to factor that in.
Okay, let's talk profitability directly. Gross margin, did that improve?
Slightly, yes. The total gross margin and the gross margin percentage both nudged up a bit for the quarter and the 6 months. Generally good news.
But wasn't there a nuance between products and services margins?
Yes, exactly. If you look just at products, the gross margin percentage actually dipped slightly in both periods,
Why was that?
attributed to product mix, maybe selling more lower margin products within the category, and those currency headwinds we mentioned. Though lower component costs helped offset some of that.
Okay. And services margin.
That improved in both periods, driven by a different mix of services being sold, presumably higher margin ones.
So for an investor, the takeaway is maybe that the higher improving margins in the fast-growing services segment are helping to support the overall company profitability, even if product margins face some pressure.
That's a very good way to put it. It helps balance things out.
What about spending? Operating expenses, R&D, and SG&A.
Both increased. R&D spending went up, linked to hiring more people and investing in infrastructure.
Which investors might see as necessary for future innovation, right? Long-term investment.
Generally, yes. Investing in R&D is usually viewed positively, assuming it eventually leads to new products and services.
And SG&A selling general and admin costs.
Also up, attributed to professional services and, again, more hiring.
Okay. Investors will watch that to make sure it's controlled, that it's not outpacing revenue growth too much.
Right. It's about efficiency.
Yeah.
Is the spending translating into results? That's the key question.
Now, a really big topic for Apple investors, shareholder returns, buybacks and dividends. What did the report say here?
Huge activity here. Apple bought back a massive $48.3 billion of its own stock in just the first 6 months of fiscal 2025.
Wow. How much in the second quarter alone?
$25.0 billion just in Q2. And even after all that, they still had about $40.8 billion left on their existing repurchase authorization at the end of March.
But that's not the whole story, is it? There was news after the reporting period ended.
Exactly. This is crucial for investors looking forward. On May 1st, after the quarter closed, Apple announced a new $100 billion share repurchase program.
$100 billion. That's enormous.
That's a massive signal to the market. It doesn't just reduce the share count, potentially boosting EPS and stock price.
Right.
It also signals huge confidence from management in future cash flows and their commitment to returning that cash to shareholders. Markets usually love news like that.
And it wasn't just buybacks, right? Dividends, too.
Correct. They also announced they're increasing the quarterly cash dividend, going up from 25 cents to 26 cents per share,
Okay.
starting in Q3 2025. And they explicitly stated they intend to keep increasing it annually.
So you've got huge buybacks and a growing dividend. That's a powerful combination for attracting and keeping investors, isn't it?
Definitely. It appeals to both those looking for capital growth and those seeking income. A very shareholder-friendly approach.
Okay, lastly, we need to touch on some of the external factors and risks mentioned, legal challenges.
Yeah, the report acknowledges ongoing legal and regulatory stuff. The Digital Markets Act in Europe, the DOJ lawsuit in the U.S., the Epic Games case.
And there have been developments, right? Fines, rulings?
Yes. The report mentions a recent fine related to the DMA and some findings against Apple there, plus the violation finding in the Epic Games appeal. These things create uncertainty.
Uncertainty and potential cost, I imagine. Financial penalties or forced changes to how they operate, maybe the App Store.
Exactly. Investors have to weigh that risk. How might these legal battles impact the business model, especially around the App Store? And what could the financial fallout be? It could affect future profits and growth, and therefore the stock.
And then there are the broader economic worries.
Right. The report mentions macroeconomic conditions, inflation, interest rates, currency swings, all the usual suspects that can affect consumer spending and company costs.
Plus, trade issues, tariffs.
Yes, newly announced U.S. tariffs and the potential for retaliation were mentioned. That adds another layer of complexity for their global supply chain, costs, pricing.
It creates a lot of unknowns, doesn't it? How it will ultimately impact their bottom line.
Absolutely. And the report noted inventories were down. Maybe that's them managing supply chains tightly because of this uncertainty, or maybe it reflects their forecast for demand. Hard to say for sure.
Okay, so let's try and wrap this up for someone looking at Apple stock based on this 10Q. What are the key takeaways?
Well, you've got solid overall growth in revenue and profit. That's positive. Services are a real bright spot, growing strongly with good margins.
But products are more mixed.
Yeah. Mac and iPad showing surprising strength, iPhone revenue holding up okay thanks to Pro models, but wearables saw a decline.
Geographically stable in Americas and Europe, but some concern over Greater China's 6-month trend.
Correct. And then you have the huge positive of massive capital returns, the buybacks, the dividend increase. That's very attractive to investors.
But offset by, well, offset isn't the right word, but complicated by these external factors, legal challenges, macroeconomics, trade tensions.
Exactly. Those introduce risk and uncertainty into the outlook. So investors are balancing this underlying financial strength and cash return against these external pressures and the nuances in product performance.
So this deep dive gives you, the listener, a concentrated look at the data points most likely influencing how investors are thinking about Apple right now.
Precisely. It highlights the company's strengths, particularly cash generation and services growth, but also the headwinds they're navigating.
So maybe the final thought to leave you with is this. Considering Apple's strong financials and shareholder returns on one hand, and these significant external pressures, legal, economic, trade on the other, which set of factors do you think will ultimately have the bigger say in shaping Apple's stock valuation moving forward? Something to ponder based on everything we've discussed. Thanks for tuning in.